Welcome back. We're in the midst of a conversation about the commodity markets, which have seen a bit of a volatility as the Asian markets began and the European markets have continued. Remember, the US markets are shut because it's the Memorial Day holiday there. Peter, when you look at the dollar index, it's come off its highs, and that clearly seems to have supported a lot of metal prices there. How are you looking at the dollar index from here on?
Well, Manisha, I think 99, 99.05 at the moment. I'm interested. I look at the 10-year and the 2-year. You got a 10-year running at 4.56. You got a 2-year. Can't believe it, at 4.12%. The US dollar index. We've got to see those bond rates come down, and then what's the positioning as far as PCE this week? And you've got also, I think it's Q1 GDP number, second revised. So if the PCE is hotter than expected, that's going to cause impact as far as where does Fed Chair Warsh position himself, and do we see a 25 basis point hike by year end? Everyone's saying it's baked in, but I still think there's a little bit of uncertainty. So that's going to impact naturally US dollar index, and that'll flow on to bond rates, and then the whole thing will start to look at currency trades and so on. So I think US dollar will actually take a little bit of a leg down.
All right. Naveen, pardon me, would you say the same about rupee? Because we've seen a huge amount of depreciation and then a couple of better days.
Yeah, so there were fundamental reasons, Manisha. It was more to do with the external vulnerabilities than the Indian pressure. In spite of the CAD, the current account deficit, all was related to the energy prices. And since the energy basket at one point of time in March, for India has gone up to an extent of around $157 or so. I think that was a major pressure point for the rupee against the dollar. At the same time, has been an outflow from the FIs from India. There has been $19 billion worth in 2025, and we have seen about $21-22 billion in five and a half months of this calendar year. And March alone itself was around $11 to $12 billion of outflow. So I think the pressure would continue to be on rupee against the dollar. The basic factors remain the higher US bond yields and the dollar index movement. If the inflation continues to uptick, then all chances of being the hawkish Fed and the interest rate hikes, which again would have a negative I would say pressure point on the bond yields, and would again be negative for the rupee. But at this particular point of time, in the last 3 or 4 sessions, the rupee has come down drastically from around 96.96, which we hit on, I think, Thursday last week. We are currently at around 95.34. So I think around 95 would be the resistance level for the rupee against the dollar. And I would say 96.5 would be something on the depreciative side. But a close check, not beyond 97.5 to 98 at this particular point of time, as things stand and what we hear from the global economics.
Fair point that. So very, very volatile currencies as well since the West Asia conflict. But gold and silver should come in on your screens because we've seen some bit of a gain come back here. Peter, buying on the back because the dollar has seen a bit of a decline. The crude is down as well. So some money rotating here again?
Well, I think so, Manisha. I feel as though gold, you're at 13-week lows. It's had not a nice little run up today, $30 or $40. It was up quite strongly, about 1.3% earlier in the day, and it's given off some of those gains. Silver's had a nice little run as well. So, yeah, I'm thinking they're going to be stronger in the second half. I'm still, a lot of conviction to that. I think that the second half's going to be a lot stronger than the first half. And we've just got to see how it trades as far as where oil is. Secondly, where equities are and bond rates and US dollar index. So there's a lot of big parts of the pie. And I think that, Precious is going to have quite a strong next 18 months over the end of 26 and certainly into 27 is going to be red hot.
Are you changing your targets for this year and the next, Peter? Are you...
Yeah, I think it's, I'm still thinking they've got the capacity to be a 6,000 plus trade sometime this year, the latter part. I want to see what's going on as far as bond rates. I feel as though that the oil market, if things move the way that I think they'll move, then I'm expecting a fair bit of softer energy prices. Inflation's going to go down. Gold's going to be a safe haven. They're going to flock to it, and certainly silver. So yeah, probably 6,000, a line in the sand by sometime by end of year. And I want to see silver back above 100, Manisha, and then I'll give you another forecast for next year. Throw another 1,000 on gold at least, and silver probably that 135.
Naveen, how are you matching those numbers that Peter's just given to us?
And that was something on the high side for $6,000 for the gold. I think 5,500, 5,400 levels would be something we are foreseeing right now because of the safe haven demand. Continues to be on the central bank how their demand comes during the second half of this particular year. But 5,500, 5,600 would be something if the dollar depreciates and the Federal Reserve doesn't go on the hawkish stance. So the central banks, the inflation, and I would say the demand particularly would be the key to watch out for. Plus the oil prices. The oil would lead to inflation, the bond yields, all those things would matter for precious metals. But at this particular moment, I tend to slightly differ from Peter of $6,000 or 100 for silver. Silver can be on the 90s, where we are currently at around 79 or so. I think because of if economy stabilizes, the demand continues to be for the industrial metal in case of silver, then might be a deficit on the supply side, the demand coming in would be positive for silver, $100 or so, but 5,400, 5,500 levels on the dollar terms for gold as of now, what we foresee.
All right. So there is Naveen absolutely playing it safe there. Yes, there is bullishness in gold and silver, but not at those kind of levels. Peter, how are you looking at the copper prices now? Because while, of course, we keep hearing about those smaller mines coming here and there, but with what NVIDIA has said and is looking to commission more and more data centers, and that means a lot of demand for copper is going to come.
Absolutely. That's the story. I mean, more demand, Manisha. You've hit it. That's the line. You've got the likes in the video on all the data centers. The demand is going to be so strong over the next year and 2 years. We've given up some of those gains. We're at 14.4, I think was the high. You're now at about 13,650 on the LME. I'm expecting it to track higher. So yeah, copper's going to have again a very strong run up to the end of year. Probably 15,000 has got to be a number to look at from a line in the sand. It's really only 10% up from where we are at the moment. So I think it's going to snap through 14 with conviction. And if it can take that, rally up to, maybe by the start of the fourth quarter, I think you'd probably be, high 14. So 15 is very achievable.
Well, that chart that we have it on screen on you does show that within the metal space, it is really copper, which has given you the best of returns in 2026 till time. And in the last 1 month as well, it really has been copper, which has seen more money flowing in. And let's not forget that copper has made an all-time high in the month of January. It did go to all-time highs in the US market in the month of May as well. And it wasn't too far away for LME as well when it comes to all-time highs there in 14,800, of course, is an all-time high at this point in time with 15,000 of a target coming up, as Peter says. Naveen, what is your sense within the metal space when you look at copper and then aluminum and zinc and steel and iron ore? Copper clearly seems to have done quite well.
I think there has been a sharp run, Manisha. As you said, we did saw the copper prices touching highs in January this year, at the start of the year, where everything was on the roof. Means the gold touched new highs, silver touched every day the new highs. And the copper didn't, or the base metals particularly, and copper in that particular regard didn't lost that steam. So I think there has been a sharp run on the upside for copper, as you are showing 6% plus in the last month in 2026, the calendar year, around 12.5% or so. I would say around $13,700 is where the copper is currently. I would say there would be some kind of a respite on the consolidation side for the copper prices for the next 1 or 2 months. But I agree with Peter. The demand on the AI, the semiconductors, all that would be positive, not just for the copper, to an extent for silver too. And therefore, both the commodities on the industrial metal space looks quite interesting as of this particular point of time.
It sure does. So buying gold, silver and copper as well, not so much in sense of energy when it comes to crude, and some decline in the dollar index is what we are working with when it comes to currencies as well. Peter, Naveen, thank you so much for joining in and making
Thank
sense
you.
of what really is what the traders should be looking at when it comes to that segment. And with that, that's all the time that we have on this show. Thank you for watching.